I'm David Brickman, the head of Freddie Mac Multifamily, and I'm here today with Ivan Kaufman, the CEO and chairman of Arbor Realty Trust. Ivan, welcome.
David, pleasure to be here, and thanks for having me. You know, it's interesting because what we're finding, and if you look at the data, the small balance place is really workforce housing. And I think by bringing greater liquidity and better information, I think you'll have better housing and greater opportunities for people who can't afford housing to have more effective housing. And as you also know, there are no new housing starts for B and C properties. A lot of these small balance loans tend to be the B type of properties. So I think providing liquidity will improve the condition of housing for workforce housing.
Yeah, no, I couldn't agree more. And certainly that's a big focus, it's a mission of ours, is to better serve affordable and workforce. And the statistics on the smaller balance, smaller property space are really noteworthy in terms of how much more affordable that space is, how much lower the rents are relative to incomes compared to the larger conventional space, and particularly in this current environment where we have an acute crisis really in affordable rental housing. I think it's critical that we continue to provide that liquidity to the space to help preserve that workforce housing. And we'll continue to look for ways in which we can innovate to not just drive more liquidity there, but possibly even help in terms of the supply of workforce and affordable.
I think you're seeing that already. I mean, clearly the bigger banks tend to go into more of the urban areas like New York City and areas like that. What you're seeing in the data is that the small balance loans are generally in the suburbs or secondary markets. That's where they have a greater market share. So doing B housing in the secondary markets is something that was lacking, and I think that this product is allowing that segment of the market to be served much better.
Now, as for us, it's been just a great experience being your partner and having us both grow together. What stands out in terms of the Freddie Mac program? What works well, and candidly, what works less well?
So you brought a number of products, you brought standardization, and you brought a commitment. A lot of people step in a market, step out of a market. By you being committed to the market, it allowed us to be committed to the market. When we're investing millions of dollars in technology and training our people and making sure that our originators are focused on this segment because it's going to be here for a long period of time, your commitment has made us committed, and therefore we're both great partners servicing and penetrating the market.
We are as firmly committed now as we were when we started, and we are resolute in that commitment. I remember 2014 or 15 when we were launching the program was at our annual conference saying that we were targeting a $3 billion annual run rate, and was told after that a lot of people were deeply skeptical that we would either get to that level and or that we would stay in the market. And so as we're now looking at something as much as $7 billion for this year, hope that demonstrates to everyone we are firmly committed, and firmly committed to those folks we've grown with and worked with, and Arbor has been just really in the forefront of that growth. You know, we also are continuing to look at how we expand a little beyond just serving the space in terms of the affordable housing opportunities. Are there ways we could do more to drive more capital to help support preservation or development of new affordable or workforce housing, particularly of a smaller scale? There seems to be sufficient capital for large Class A in major markets, as you mentioned before, but we think there's probably an opportunity elsewhere. And you know, we as with the small balance program, you know, look forward to exploring those things with you.
I think that's a really good point, David, because the cost to originate a loan, especially a small balance, make it cumbersome. It doesn't just make it cumbersome because they're small. Most firms don't like to dedicate their resources to it. We do, and it's not an easy thing to do. I think one of the things we'll talk about and explore is maybe there's a renovation component on the small balance side, because you don't want to have multiple transactions on a small balance side. And since it is B and C stock, it does need renovation. It does need to be upgraded. So I think that that may be an element that's worth exploring.